Let's trade Tesla. The stock down on Wednesday after a fairly bearish analyst note rattling some investors. KeyBank Capital Markets saying that they expect weaker than expected results and production for Model 3 in the fourth quarter. Stock down over 5% in the last week alone. Model 3 production concerns, nothing new, but KeyBank rattling the markets a bit. Everyone just wants to know, is Tesla now a better deal because the price is less, or a stock to be avoided?
I think that's the big question here is, like you said, production. Tesla needs to deliver Model 3. Its whole existence in many ways, I think, depends on that. The problem here isn't demand. They have so much demand. It's a question of supply. If they can get their production problems solved, everything else will flow smoothly afterwards. And I think the stock recovers tremendously. That's really the big question facing Tesla going forward.
Well, it's not just the deliveries in the fourth quarter coming in at about 1,550 versus most expecting at least 2,500. It's the guidance for ramping up production of the Model 3. Their previous guidance was 5,000 per week by the end of Q1. We're not even going back to where it was before that, which was supposed to be at the end of Q4. But that was the previous guidance, by the end of Q1. Now they're saying by the end of Q1, it'll be just 2,500 Model 3s per week, and then 5,000 per week by the end of Q2. You would think that potentially Wall Street would slam them on slowing down the ramp up of the Model 3. But that's not what we're seeing in the analyst notes today. Here are a few of them. Evercore, ISI. Model 3, pain, won't go away. Deutsche Bank, growing pains once again, focus attention on cash. Morgan Stanley, delayed Model 3 ramp, still 2 times our forecast. We buy the dip. And if you are bullish on the future of Tesla, if you really think that the Model 3 is going to pay off, then this is one of those dips that you take a look at. Take a look at shares of Tesla over the last year, and we're nowhere close to where we were earlier this year. It is not down in that 280 range that a lot of people like to talk about, but it is one of those dips that gets some attention. Finally, in terms of overall deliveries, yes, Tesla did exceed its forecast of delivering about 100,000 vehicles. Officially, they delivered just over 101,000. But the guidance has changed so many times, guys, that I hear very few people saying, well, they're going to deliver X number of vehicles this year. It's about the Model 3. It's not about overall production. It's about the Model 3.
There are certain other issues that sort of extrapolate from the delayed ramp of the Model 3. I mean, margins won't, in terms of margin efficiency, that won't ramp as quickly as anticipated by Wall Street. And also you run the risk that consumers, they might actually cancel their reservations. I mean, they didn't put very much down. It's not even clear if they'll lose their deposit money if they do cancel, because they've got to wait even longer for this 3 ramp.
Melissa, I'm going to be in the camp of those who believe that we're not going to see widespread cancellations of reservations.
Right.
Most people who have put in a reservation are very bullish on Tesla. They believe in the company. They've already had those reservations in for a couple of years. Okay, so they got to wait another 8 or 9 months potentially, or however long it'll be. I don't think they're going to cancel on that. But you do bring up a good point in terms of margins, in terms of cash flow, and in terms of whether or not this company needs to do another capital raise as it continues to work through these production issues.
Yeah, I mean, Tesla is the Taylor Swift of stocks nowadays. It's haters gotta hate. I've never seen a stock that people are so opposed to each other about if it's going to go up or down. The one thing, very good point that Boris makes, I like the stock here. I like buying a put spread on the stock. Going out to June, the $300, $250 put spread will cost you about $14 to protect you from some of the downdrafts you may see in this stock. Keep an eye on interest rates, because you hit a key point about cash flow. So long as rates are low, these guys are going to be able to go out and find funding to keep production going in this sort of rate environment. As rates creep higher, that's going to be a concern for Tesla. Tesla is very linked to higher interest rates for all of the borrowing that they have on their debt.
It's the ultimate faith stock. You either are a believer in the Tesla product, the electric car, the revolution going forward, and everything else falls by the wayside, because if they can just produce, all of those problems will go away. And if they don't, then yes, it becomes a very, very tough year.